Managing Director of Internet Equity Research at Oppenheimer. Jason, thanks for joining us. I'm not sure if you just heard the past discussion, but Vahan is not a tech investor. He's buying NVIDIA. I mean, not just Meta, which I can understand as a value play. So where do you think tech goes from here?
So, look, I think it's bifurcated. I think with the large caps like a Meta or Google, you can look at a PE. I think to your prior guest point, you've got Meta, depending on if you include or exclude the reality losses, call it 10 to 15 times next year's earnings. You've got kind of Google 17 to 18 times. So, clear. I think kind of you can look at this valuation support, and it's really about short-term fundamentals that probably drive those, and we can talk about that. When you start to get into mid and small cap growth, or companies that historically hadn't had kind of cash flow or earnings valuation and were more multiple of sales, that's more Fed driven. So really, it's kind of like a tale of two stories. And so you do have probably the bulk, right, of tech, more Fed driven, where you do have some of the mega caps, and I would even add, like maybe even an Amazon to that, where there is more valuation to support.
I do want to look a layer down, Jason, at some of those mid caps. I know the names that you like include Uber, Etsy, Match. As you say, they are far more driven by the Fed and interest rates. What makes you interested in them now? Same question I just asked Vahan when we heard such a hawkish tone from Powell, which, they were the ones to sell off first in the market on Friday. These high growth names.
Sure. So, I mean, Uber, we like it because I think you have multiple catalysts. I think there's nothing better to get people to go back to the office than a pending recession. So we think that will be kind of a people returning to the office tailwind. Gas prices coming in also help them at the margin. And then, I think you've got the stock now at 17 times our estimate for next year's EBITDA. While that's not cheap, you can put draw a line in the sand, right? It's not, 30 times cash flow and a multiple of sales. So I think you've got multiple factors that kind of work with Uber. Onto kind of
let me go back to Uber for 1 second, because this is still a very unprofitable name, at least on a GAAP basis, though they're increasing free cash flow and adjusted EBITDA profitability. Why not go for some of these mid-tier names, especially in the software space that actually are showing profits?
So I'm an internet analyst. I mean, if you want me to give you a name like that in our world, it would be a company like Integral Ad Science. They're a $1.3 billion market cap. They do trade at 10 times EBITDA. And it's they have software and a technology solution to help advertisers understand ad verification. So did my ad run? Did it run next to content that I found agreeable or disagreeable, to just summarize the business? But that's a name, for example, its closest competitor trades at 20 times cash flow. They trade at 10 times. So there are names, right? There's a lot of companies out there. It just depends on what your parameters are.
Yeah, what your risk appetite is. When it comes to Etsy, this was kind of like a unicorn in the retail space when everyone else was hurting. It posted decent results. That stock is up some 44% this quarter. Is it too late to buy this name?
No, I think what we've seen is a few things. Number one is that the inflationary factors are disproportionately impacting kind of the bottom, call it third of consumers. And Etsy tends to be, in our view, more of a upmarket platform. We've also seen that they do have the ability to drive take rate, or we'll call it pricing power. So not necessarily on the buyers or the consumers, but they're able to extract more fees out of the sellers, because the sellers don't really have other places to go. Alternatives can be more expensive. On top of that, if ad prices do come down because there's less demand by other sectors slowing, potentially call it travel or parts of retail, they could lean into advertising when they see lower ad prices. So at 21 times next year's cash flow, not cheap, but again, a cash flow story. Yeah. And we think that's the kind of names that could work in this environment.